What if poverty isn't a lack of money, but a lack of daily discipline? David Tepper didn't get rich by luck. He got rich by doing a few hard things every single day. And if you master these habits, staying poor becomes mathematically impossible. David Tepper rose from rejection and debt to become one of the most powerful investors in the world. His success wasn't built overnight, it was built daily. In this video, you'll learn the exact habits, mindset, and disciplines Tepper lives by, and why repeating them every day can permanently change your financial future. Tepper believes emotions destroy wealth faster than bad investments because emotions quietly sabotage decision making long before money is ever lost. Fear convinces people to sell at the worst possible moment. Greed pushes them to buy at the top. And impatience makes them abandon sound strategies before results have time to compound. None of these behaviors come from a lack of intelligence. They come from a lack of emotional discipline. Tepper learned early that markets are not just numbers and charts. They are reflections of human psychology. Those who fail financially are often reacting emotionally to noise, while those who win are responding logically to reality. Fear is the most destructive emotion in investing. When markets fall, fear tells people that the pain will never end. It narrows thinking, shuts down rational analysis, and creates urgency where none is needed. Tepper trained himself to recognize fear not as a signal to run, but as a signal to slow down and think more clearly. He understood that panic is contagious, and when everyone is afraid, prices often disconnect from fundamentals. Instead of reacting, he analyzes. Instead of fleeing, he evaluates risk versus reward. By doing this repeatedly, he turned fear into an advantage rather than a weakness. Greed is equally dangerous, though it often disguises itself as confidence. When markets rise and everyone is making money, greed whispers that the rules no longer apply. It encourages overexposure, reckless leverage, and the belief that success is guaranteed. Tepper never allows excitement to replace discipline. He knows that the same market that rewards greed today will punish it tomorrow. By keeping his emotions steady in both booms and crashes, he avoids the extreme swings that trap most investors. Calm consistency, not emotional highs, is what compounds wealth over time. Impatience is the silent killer of long-term success. Many people understand what they should do but cannot tolerate waiting. Tepper's edge comes from his ability to sit through discomfort. He accepts that good decisions can look wrong in the short term. Instead of chasing instant validation, he measures success by process, not immediate outcomes. This patience allows him to hold positions long enough for logic to outperform emotion. Every day, Tepper trains himself to act on logic rather than emotion. This is not a one-time achievement, but a daily discipline. He prepares in advance, studies scenarios, and defines risk before emotions appear. When chaos hits the market, he doesn't need to decide how to feel. He already knows what to do. Emotional control becomes automatic through repetition. When markets panic, Tepper stays calm because calmness is not accidental, it is trained. Emotional control, in his philosophy, is not optional. It is the foundation of wealth, because without it, even the best strategies collapse. Money flows toward those who can think clearly under pressure, and Tepper proves that mastering your emotions is not just a psychological skill, it is a financial weapon. Poor people stop learning not because they lack ability, but because they believe learning ends when school ends. That belief quietly locks their future in place. Rich people, on the other hand, understand that education is never finished. David Tepper is a powerful example of this mindset. He never assumed he knew enough. Even after reaching extraordinary success, he continued to study relentlessly, knowing that the world changes, markets evolve, and yesterday's knowledge quickly becomes obsolete. In Tepper's view, the moment you stop learning is the moment you start falling behind. Tepper studies economics to understand how money flows through systems, not just markets, but entire nations. He studies history to see how cycles repeat, how crises form, and how human behavior rarely changes. He studies psychology because markets are driven by people, not spreadsheets. Fear, greed, denial, and overconfidence shape prices far more than logic alone. By learning across disciplines, he builds a mental framework that allows him to connect patterns others miss. This depth of understanding gives him an edge that cannot be copied by shortcuts or luck. The power of learning is not in intensity alone, but in consistency. Tepper understands that even 30 minutes of focused learning every day compounds into extraordinary strength over time. 30 minutes a day becomes hours a week, hundreds of hours a year, and a lifetime of accumulated insight. Most people underestimate this compounding effect because it feels slow at first. But just like investing, Learning rewards those who stay consistent long enough for the curve to bend upward. Knowledge becomes leverage when it allows you to make better decisions with the same resources. Two people can have the same amount of money, the same opportunities, and the same market conditions, yet produce wildly different results. The difference is understanding. Tepper's learning allows him to assess risk more accurately, spot opportunity earlier, and avoid traps that destroy others. He doesn't need to work harder than everyone else. He needs to think clearer. Ignorance, on the other hand, is expensive because it creates invisible costs. It leads to bad investments, emotional reactions, missed opportunities, and dependence on others' opinions. People often don't realize how much ignorance costs them because the losses are hidden in what could have been. Tepper avoids this by continuously upgrading his thinking. He treats learning as a daily responsibility, not a luxury or a phase of life. What makes Tepper's approach powerful is humility. Continuous learning requires admitting that you don't know everything. Many people stop learning because their ego cannot tolerate being a beginner again. Tepper embraces it. He asks questions, challenges assumptions, and updates his views when facts change. This flexibility keeps him sharp while others become rigid. In the end, wealth follows those who invest in their minds first. Tepper proves that learning is not just about information. It is about freedom, confidence, and control. When knowledge compounds daily, power follows naturally, and staying poor becomes increasingly difficult. Tepper doesn't trade time for money because he understands a simple but powerful truth. Time is finite, but systems can scale. Most people remain financially trapped because their income depends entirely on their presence. If they stop working, the money stops flowing. Tepper rejected this model early in his thinking. Instead of asking how many hours he could work, he asked how much value he could build that continues to produce results, whether he is present or not. This shift in thinking separates survival income from lasting wealth. Trading time for money creates dependency. It ties your financial well-being to your health, energy, and availability. Tepper saw this as a risk, not security. Systems, on the other hand, create leverage. A system can be an investment structure, a business process, intellectual property, or a decision framework that repeatedly produces outcomes. Once built, systems don't demand constant attention. They require oversight, not exhaustion. This is how wealth becomes sustainable rather than fragile. Every day, Tepper mentally evaluates his actions through a single lens. Does this create ownership or dependency? Ownership means control upside and long-term benefit. Dependency means relying on someone else's approval, timing, or decisions for your income. A paycheck, while useful, often comes with limits: fixed growth, capped upside, and vulnerability to external forces. Assets, by contrast, grow, adapt, and reward patience. Thinking in assets changes daily behavior. Instead of asking how much money an activity pays today, Tepper considers what it builds for tomorrow. Does this decision increase equity, influence, or optionality? Does it strengthen a system that can produce returns repeatedly? This mindset forces discipline. It discourages impulsive moves that feel good now, but create nothing lasting. Wealth, in this view, is the accumulation of well-designed structures, not isolated wins. Systems also reduce emotional pressure. When income is system-based, decisions become calmer and more rational. You are not forced to chase every opportunity or accept unfavorable terms out of desperation. Tepper's confidence comes from knowing that his systems continue working in the background. This allows him to wait for high-quality opportunities rather than reacting to short-term needs. Ownership thinking also encourages reinvestment. Tepper doesn't extract everything for immediate consumption. He feeds his systems, strengthens them, and lets them compound. This discipline is difficult because it requires delaying gratification. Many people prefer visible income over invisible equity. Tepper understands that invisible growth is often the most powerful. Another advantage of systems is resilience. Markets change, industries evolve, and conditions shift. A well-built system can adapt, while at times, based income collapses under pressure. Tepper builds structures that are flexible, diversified, and designed to survive uncertainty. This is not about avoiding work. It's about directing work toward building foundations instead of chasing transactions. Wealth flows to those who think in assets because assets multiply effort. One good decision, properly structured, can outperform thousands of hours of labor. Tepper's approach proves that financial freedom is not about working less, but about building smarter. When your daily actions move you closer to ownership rather than dependency, money stops being something you chase and starts becoming something you attract. Short-term thinking keeps people broke because it prioritizes immediate comfort over lasting strength. It trades tomorrow's freedom for today's relief. David Tepper learned early that wealth is not built by reacting to the moment, but by committing to a vision that unfolds over decades. While most people measure success in days or months, Tepper measures it in years and cycles. This difference in time horizon completely changes how decisions are made, risks are evaluated, and opportunities are recognized. Short-term thinking is seductive because it offers quick feedback. Fast money, instant gratification, and visible results feel rewarding, even when they quietly undermine the future. Tepper understands that these small pleasures often come with hidden costs. Impulsive spending, chasing trends, and abandoning strategies too early all feel harmless in the moment, but over time they erode momentum. Wealth does not disappear suddenly. It leaks away through repeated short-term decisions that ignore long-term consequences. Thinking in decades forces discipline. Tepper aligns daily actions with long-term strength, even when the payoff is invisible or delayed. He is willing to endure periods where progress seems slow because he knows compounding works silently. Markets, skills, and reputations all reward those who stay consistent long enough. By maintaining a long-term frame, Tepper avoids the emotional swings that trap others in cycles of hope and regret. Patience is not passive in Tepper's philosophy. It is active restraint. It means resisting the urge to act just to feel productive. Many poor decisions are made not because action is required, but because waiting feels uncomfortable. Tepper waits with intention. He studies, prepares, and positions himself so that when the right moment arrives, action is decisive and informed. This patience creates asymmetry. Small actions at the right time produce outsized results. Wealth rewards patience brutally because compounding favors those who give it time to work. The first years often show little visible progress, which discourages most people. Tepper understands this curve and stays committed through the flat, boring phases. Those who quit early never reach the point where growth accelerates. Patience, in this sense, is not just a virtue, it is a competitive advantage. Impatience, on the other hand, is punished without mercy. It leads to overtrading, emotional decisions, and constant strategy changes. Each shift resets progress back to zero. Tepper avoids this trap by trusting well-reasoned processes rather than chasing immediate validation. He accepts temporary discomfort as the price of long-term dominance. Daily decisions, no matter how small, either strengthen or weaken the future. Tepper treats each choice as a vote for the kind of life he wants decades from now. This mindset turns routine actions into strategic moves. Saving instead of spending, learning instead of consuming, and building instead of chasing all feel modest in the moment, but powerful over time. Ultimately, Tepper's success is not about predicting the future perfectly, but about aligning consistently with it. By thinking in decades, he allows time to become an ally rather than an enemy. In a world obsessed with speed, his patience creates permanence, and that is why short-term thinkers struggle while long-term builders thrive. Every day, Tepper looks for situations where the potential upside far outweighs the downside because he understands that true power comes from leverage, not volume. This principle extends beyond investing. It applies to money, skills, and even relationships. Most people chase outcomes without considering the balance between risk and reward. They take small gains with enormous exposure, hoping luck will carry them. Tepper's approach is the opposite. He seeks positions where the upside is exponential and the downside is contained, creating opportunities that can change the game without exposing him to catastrophic loss. This mindset allows him to act decisively while others hesitate, paralyzed by fear or overconfidence. In money, this means investing where the risk of permanent loss is minimal, but the potential gain is significant. Tepper doesn't bet on trends that could collapse or over-leverage positions that could wipe him out. Instead, he structures trades and investments so that even if he's wrong, the consequences are manageable, but if he's right, the returns are extraordinary. This approach allows wealth to grow quietly yet powerfully over time, compounding like interest that accumulates faster than the eye can see. It's the difference between gambling and calculated high-leverage strategy. In terms of skills, asymmetry works the same way. Tepper focuses on learning abilities that produce disproportionate results relative to the effort invested. He doesn't waste time on skills that offer minimal returns. Instead, he invests in areas where a little extra effort or study could unlock enormous opportunities. This might mean understanding market psychology, mastering negotiation, or building analytical frameworks that allow him to make smarter decisions faster. Over time, these asymmetric skills compound, giving him an edge that is difficult to replicate. Relationships are another area where asymmetry is critical. Tepper surrounds himself with people who provide guidance, insight, and access far beyond what the average relationship would yield. He invests time and energy in relationships where the potential impact is significant, while minimizing energy spent on interactions that drain resources or offer little return. This doesn't mean he is opportunistic or transactional. It means he understands the value of influence and aligns his social energy with long-term growth. Most people fail to recognize asymmetry because they are seduced by immediate rewards and visible outcomes. They chase small wins with big risks, hoping to get ahead quickly. Tepper avoids this trap by consistently evaluating every decision through the lens of risk versus reward. He asks what can go wrong and how much will I gain if it goes right. This disciplined approach transforms ordinary opportunities into extraordinary results. Smart asymmetry compounds wealth quietly because it avoids the volatility that destroys unprepared investors. While others chase excitement, Tepper patiently identifies and acts on disproportionate opportunities. This consistency, multiplied over time, leads to outcomes that seem almost effortless to the outside observer. By prioritizing upside over exposure, he ensures that growth is not just possible but inevitable. In the long run, those who understand and apply asymmetry do not merely accumulate wealth. They dominate in every area of life where leverage exists. Rejection didn't stop Tepper, it sharpened him. Early in his career, he faced setbacks, dismissals, and situations that would have caused many people to quit. Instead of allowing these experiences to define him negatively, he used them as tools for growth. Each rejection became a lesson in strategy, patience, and emotional control. Tepper understands that failure is inevitable in any ambitious pursuit, but the way you respond determines your trajectory. Rejection is not a wall. It is a mirror reflecting where improvement is possible, where judgment can be refined, and where preparation needs to be stronger. For Tepper, obstacles and denials were never signals to stop. They were signals to adapt, learn, and refine his approach. Daily hardship is not a punishment, it is training. Tepper treats pressure and difficulty as exercises that strengthen mental muscles, much like lifting weights strengthens physical muscles. Life will always apply pressure in the form of market volatility, unexpected setbacks, or personal challenges. Most people break under that weight because they have not trained for it. Tepper's mindset reframes these difficulties. They are temporary, they are manageable, and they are essential for growth. By embracing hardship as a routine part of development, he transforms obstacles into opportunities to sharpen focus and improve judgment. Each challenge faced deliberately becomes a rehearsal for the next, preparing him to perform at a higher level when stakes are highest. When life applies pressure, don't break, adapt. This is the essence of resilience. Tepper doesn't resist change or fight against circumstances beyond his control. Instead, he assesses the situation, identifies levers that can be influenced, and adjusts his approach. Adaptability is not reactive panic. It is proactive flexibility. It allows him to turn potential threats into advantages. By embracing adaptation as a daily habit, Tepper ensures that he remains ahead of circumstances rather than being controlled by them. Challenges are temporary, but the ability to adjust effectively endures. Mental resilience is not a personality trait. It is a habit cultivated every day. Tepper didn't wake up one morning inherently strong-minded. He developed toughness through repeated exposure to stress and deliberate reflection. He trains his mind by confronting difficult situations, studying outcomes objectively, and refusing to allow temporary discomfort to dictate decisions. Each day becomes an opportunity to reinforce this resilience, whether through small setbacks or larger pressures. Over time, consistent practice hardens the mind against fear, doubt, and indecision, creating a mental framework that can sustain extreme challenges without collapsing. Resilience also amplifies opportunity, the ability to remain calm under pressure, to recover quickly from rejection, and to maintain clarity when others panic allows Tepper to act decisively where others hesitate. Success often favors those who endure when everyone else gives up, and Tepper has structured his life to ensure endurance becomes second nature. By treating rejection and hardship as training rather than punishment, he has created a cycle where challenges build strength instead of diminishing it. Ultimately, Tepper proves that mental resilience is not something you are born with. It is something you build every single day through deliberate focus, reflection, and the courage to keep moving forward despite adversity. Poor people chase rewards because they are seduced by the visible and immediate benefits of opportunity without fully considering the consequences. A big payout, a flashy investment, or a sudden windfall looks exciting, and many people instinctively reach for it. But what they often ignore is the hidden downside, the risk of loss, the chance that the opportunity could backfire, and the long-term consequences of a misstep. David Tepper understood early in his career that chasing rewards without considering risk is a fast track to financial disaster. Wealth is not about winning every time. It is about surviving and thriving over the long term. Rich people, by contrast, prioritize managing risk above all else. Tepper evaluates every opportunity through a lens that asks not only what could go right, but more importantly, what could go wrong. He identifies the worst case scenario and ensures that he has the capacity to survive it. This mindset is not pessimism, it is disciplined foresight. By understanding and respecting the limits of each decision, Tepper avoids catastrophic losses that wipe out years of progress. He invests time, energy, and capital where the potential reward justifies the risk, but only when the downside is controlled. Every day, Tepper asks himself, what can go wrong? This daily practice forces him to confront uncomfortable possibilities, anticipate obstacles, and plan contingencies. Most people avoid this question because thinking about failure feels unpleasant, even paralyzing. But Tepper knows that ignoring potential risks doesn't make them disappear, it only makes them more dangerous. By asking this question constantly, he keeps his decision-making anchored in reality rather than hope or emotion. This approach allows him to act with confidence even in volatile markets because he has already accounted for the worst outcomes. Survival is the first rule of wealth. Without preserving capital and protecting oneself from catastrophic loss, no strategy, skill, or insight can produce lasting results. Tepper survives market downturns, recessions, and financial crises because he respects risk before chasing profits. He structures trades, investments, and business decisions in a way that limits exposure and preserves the ability to rebound. While others panic and sell during crises, Tepper's preparedness allows him to remain calm, assess opportunities, and act decisively when others are paralyzed by fear. Managing risk also builds freedom. When Tepper knows that he can survive adverse events, he can take calculated risks that others avoid. He doesn't chase short-term excitement. He seeks opportunities that compound wealth steadily and sustainably. By putting survival first, Tepper ensures that every profit has a foundation of security beneath it. Risk management becomes not a constraint, but a tool that enables growth without exposing him to unnecessary danger. Ultimately, Tepper's philosophy demonstrates that wealth is less about winning frequently and more about avoiding ruin. Poor people focus on the upside while ignoring the downside, and they are punished by volatility, setbacks, and miscalculated moves. Rich people, like Tepper, make survival the priority because lasting wealth is not built on luck or luck alone. It is built on consistent, disciplined management of risk and the courage to act with clarity when opportunity appears. Tepper doesn't waste energy on noise because he understands that attention is one of the most valuable resources anyone can have. Every distraction, every idle thought, every moment spent on things that do not directly contribute to your goals is energy permanently lost. Most people fill their days with noise without even realizing it. Social media, scrolling gossip, comparing themselves to others, or reacting impulsively to every little stimulus around them. These activities may seem harmless, but over time, they drain focus, reduce clarity, and weaken decision-making. Tepper treats attention like money. Once it's spent, it cannot be regained, and frivolous spending creates cumulative loss. Every day, he deliberately cuts out distractions that steal focus. Gossip is one of the most insidious forms of noise because it draws attention away from meaningful work and consumes emotional energy. By avoiding the opinions, dramas, and trivial concerns of others, Tepper keeps his mind clear and directed toward his objectives. Comparison is equally damaging. Observing the lives, successes, or failures of others can trigger envy, doubt, or impatience. Tepper recognizes that these emotions are counterproductive and that external validation has little impact on actual wealth or progress. By focusing inward and on actionable priorities, he avoids the trap of chasing someone else's path rather than building his own. Impulse spending is another form of noise Tepper actively eliminates. Momentary desires or social pressures can lead to financial decisions that provide immediate gratification, but no long-term value. Every dollar or hour spent on impulse actions represents lost potential for compounding growth, whether financial, intellectual, or relational. Tepper treats both time and money with the same disciplined approach, ensuring that every investment, whether it's capital, attention, or effort, serves a clear strategic purpose. Attention is currency, and Tepper understands that where you spend it determines the quality of your outcomes. Focused attention allows him to analyze markets, assess opportunities, and make decisions with clarity and precision. It also allows him to learn, grow, and innovate at a rate far beyond those who let distractions dominate their days. Just as financial investments compound over time, the cumulative effect of disciplined focus becomes enormous. Small daily losses of attention seem insignificant in the moment, but over months and years, they add up to missed opportunities, poor judgment, and stunted growth. Spending attention wisely requires conscious practice. Tepper structures his days to maximize concentration on tasks that matter most. Meetings, communications, and even social interactions are filtered for value. He doesn't react impulsively to every noise or demand. Instead, he prioritizes high-leverage activities that align with his long-term objectives. By doing this consistently, Tepper ensures that his energy is aligned with outcomes that matter, creating momentum in all areas of life. Ultimately, Tepper's discipline with attention demonstrates that wealth is not only about money, it is about the capacity to act effectively in the world. Noise steals both time and judgment, while focused energy amplifies impact. By cutting distractions, avoiding comparison, and resisting impulse, Tepper turns attention into a strategic advantage, proving that where others fritter away energy, the disciplined investor gains clarity, leverage, and lasting success. Preparation creates speed because Tepper understands that opportunity is fleeting and often arrives when least expected. Most people respond slowly to rare moments because they are unprepared, caught off guard by uncertainty, or overwhelmed by complexity. Tepper's advantage comes from doing the thinking in advance. He anticipates scenarios, evaluates risks, and studies possible outcomes long before the decisive moment arrives. By preparing daily, he ensures that when opportunity knocks, he doesn't waste time figuring out what to do. He acts immediately, decisively, and with confidence. This ability to move faster than others often turns ordinary chances into extraordinary results. Daily preparation is not just about accumulating knowledge. It is about mental rehearsal. Tepper reviews markets, studies patterns, and considers a wide range of possibilities repeatedly. Each exercise trains his mind to recognize the signals that matter and ignore the noise that doesn't. By doing this consistently, he reduces hesitation, eliminates doubt, and conditions himself to respond instinctively when a rare opportunity appears. Others may waste hours, days, or even weeks analyzing a situation they've never anticipated, but Tepper has already done the groundwork. This speed is not reckless. It is informed, calculated, and rooted in experience. Preparation also allows Tepper to act under pressure without panic. High-stakes opportunities often arrive during moments of chaos or uncertainty, when emotions run high and decisions must be made quickly. People who lack preparation freeze, second-guess themselves, or follow the crowd blindly. Tepper, however, has a mental roadmap for these moments. Because he has anticipated possible outcomes and formulated strategies in advance, he can execute quickly and effectively. This responsiveness turns market volatility, competitive pressure, and unpredictable events into advantages rather than obstacles. Rare opportunities are life, changing precisely because they are infrequent. Missing them can mean years of lost progress, while capturing them can transform wealth, status, and influence overnight. Tepper knows that luck favors the prepared mind. Daily preparation compounds quietly but powerfully, building a readiness that positions him to act decisively when others hesitate. It is the difference between a life of mediocrity, reacting to circumstances, and a life of extraordinary success, shaping circumstances to one's advantage. Preparation also reduces mental fatigue during critical moments. By doing the analysis and planning ahead of time, Tepper frees his cognitive energy for execution rather than problem solving under stress. This allows him to focus on refining strategy in real time, spotting subtle shifts and making quick adjustments without being paralyzed by pressure. It is a form of leverage. By investing effort up front, he multiplies effectiveness when it matters most. Ultimately, Tepper's approach demonstrates that opportunity alone is not enough. Preparation creates the velocity needed to transform potential into reality. Daily preparation turns rare, fleeting chances into life-changing decisions, because when the moment comes, Tepper does not scramble. He moves fast, decisively, and with unwavering clarity. By doing the work consistently, he ensures that when the stakes are highest, he is already ahead, ready to act, and positioned to win where others hesitate. Confidence isn't arrogance. It's earned through consistent effort, preparation, and mastery of one's craft. David Tepper embodies this principle, understanding that real confidence is not a personality trait or something you can fake. It is the natural byproduct of relentless discipline and intentional action. While many confuse arrogance with confidence, Tepper distinguishes between the two. Arrogance is loud, reactive, and ungrounded. It often masks insecurity and leads to poor decisions. True confidence, as Tepper practices it, is quiet, deliberate, and rooted in preparation. It allows for clarity under pressure, precision in decision-making, and resilience in the face of uncertainty. Tepper's confidence is built daily through work, study, and disciplined action. He does not rely on past success or innate talent to give him assurance. Every day, he sharpens his knowledge of markets, studies patterns of human behavior, and hones his analytical skills. This repetition compounds over time, creating a deep well of competence that cannot be shaken by external circumstances. The consistency of this practice reinforces his ability to make decisions quickly and accurately, even in high-pressure situations. Daily work eliminates hesitation, and daily study reduces ignorance, both of which form the foundation of confidence that is unshakable. When you prepare daily, doubt disappears. Tepper knows that uncertainty is the enemy of decisive action. Most people hesitate because they fear making mistakes or being wrong, and this fear is fueled by a lack of preparation. By contrast, Tepper addresses potential challenges ahead of time. He anticipates risks, evaluates multiple scenarios, and formulates responses in advance. This foresight transforms anxiety into assurance, hesitation into action. Doubt is not eliminated by wishful thinking or bravado. It is eliminated by knowledge, planning, and repeated exposure to the realities of risk and opportunity. The disappearance of doubt is directly linked to the ability to seize opportunity. Tepper's decisions are rapid but calculated because he has already thought through the consequences. While others are paralyzed by uncertainty or second-guessing, he moves with clarity, decisiveness, and a sense of purpose. This is how wealth follows confidence. It is not the act of being bold for the sake of boldness, but the act of being prepared and skilled enough to act when others cannot. The market, life, and business reward those who can operate without hesitation, and Tepper's daily preparation allows him to act with a calm, strategic edge. Confidence also reinforces discipline. When you believe in your skills and preparation, you are more willing to commit to long-term strategies, endure short-term setbacks, and resist distractions that pull you away from your goals. Tepper's confidence does not make him reckless. It makes him precise. It allows him to focus on high-leverage opportunities, navigate volatility with composure, and maintain consistency when most people would panic. Ultimately, Tepper shows that confidence is earned through daily action, study, and disciplined habits. It is not arrogance, but certainty grounded in preparation. When doubt disappears, decision-making becomes clear, risk is managed intelligently, and opportunity can be captured decisively. Wealth, in Tepper's framework, is the natural result of a mind trained to act confidently because it is prepared, disciplined, and unshakable.